If you missed what happened in the markets this past week, you might be feeling it next quarter. Let us dive into exactly what you need to know here in this video. Volume has been inching its way up just a touch this past week in the S&P. Here we are looking at SPY, the S&P 500 ETF. The reason why we pull up SPY first is to get a sense of where the market is at, and I want to dive into this as well as the Qs, the Dow, and the Russell. But really quick, we pretty much are approaching, you know what I mean, like that all-time high zone. As you can see, the all-time high on SPY is up here. So we got kind of close. We're into that ballpark, into that range. You can even make the argument like we're into this area of consolidation, this higher volume node we've been going on right here. So not a surprising zone to see some rejections and seeing us start to kind of pull back a little bit. That said, that's SPY. Here's QQQ. Very similar story. Got closer to its all-time high, didn't quite get there. DIA, the Dow, not really close at all. I mean, it's not that far away, right, in the grand scheme, but it's not too close to a high. It's still got to go about 7.5%. And the Russell is going to be a similar story. Got a long way to go to get to its all-time high. So the S&P and the NASDAQ are the two dogs that's like, okay, yeah, these are the guys that are the strongest, the closest, the bigger name stocks. It's not super surprising. It's kind of the same story we've been seeing for the past, well, really, I guess you can say for the majority of this bull market. Now, in this video, we have some interesting things I want to talk about. Not only do we have market analysis, we got a bunch of stock requests, but I have some really interesting data on some of these stocks, and I think that could be quite interesting with what we have to see going forward, as well as we got some news to talk about. And I recall last week, I did not pull up sentiment. I always pull up sentiment, but I didn't pull up sentiment. So let's go there first. Fear and greed, baby. Let's see. We're sitting at the top end of neutral on the fear and greed index. Not super surprising, like kind of stagnant. You know, put call ratios did spike up. I wouldn't be surprised if that was due to the news midweek about what's going on in the Middle East. With Iran, not surprising. Markets kind of, getting a little sketched by that. We saw major moves in crude oil. We saw some ups and downs in gold and silver. They haven't really moved too much this week in the grand scheme from where they were last week. So kind of the same story there. But over here on the right-hand side now, I mean, I just saw these and I thought like, kind of interesting. The battle right now we have is between Trump and Powell. And I think from a logical standpoint, we can talk about this by looking at the 10-year in a second. But if you don't know what's going on here and the whole drama, essentially Trump says, we want rates lower. Cut rates, cut rates, cut rates. Calling for the equivalent of 10 cuts. Now, okay, the reality is it's not going to happen anytime soon. That would be a dramatic move from Jerome Powell and the Fed. They're not going to do that. And you're starting to see some Fed officials leaning that same way in a sense, seemingly. But in the grand scheme, Trump wants what he wants and is going to keep saying it, but is Powell going to budge? Based off what we have right now, the Fed came out this week, did not change rates. However, there is a meeting July 30th, so about a month and a half from when we had this past meeting. And as of right now, there is an 83% chance, 83.5%, that the Fed's going to keep rates the same. 16.5% that they're going to cut rates by a 25 basis point cut. Why that's important is because this whole argument back and forth between Trump and Powell, etc., it really comes off the back of paying less interest on U.S. debt. Now, the problem is, if you were to take a peek, if we were to dive deeper into the charts, the problem is the bond market, the 10-year yield as an example here, is not telling the Fed or signaling that there's any reason for the Fed to cut rates. Because if the Fed cuts rates, yes, it saves us money, but does that send inflation back up? And that's not what the Fed wants. The Fed's not going to appease the president just because he says he wants to save money on this. And in theory, like, you can make arguments both ways. Like, yes, it makes sense. But at the same time, that's just not how monetary policy has worked and how the Fed has done things. So if they were to do something like that, who the hell knows what happens, right? And the reality is they're not going to. So until we see a substantial move down inside of the 10-year or in the 10-year, I just don't see, a reason for us to believe that we're going to get those cuts. The best chance we've got so far this year, or recently, I should say, with this next, potential meeting. It's still about a month and a half out. By September, there's a pretty good chance we get a cut, but that's still a few months out, so we got some time leading into that. Okay, so that's that. We covered the 10-year. We covered the fear and greed. Let's talk about sentiment. AAII sentiment survey. It's kind of holding steady. Yeah, I mean, really, same kind of general deal. Not surprised to see this week 33.2 bullish, a little bit lower than last, with less on the fence and more bearish because of what's going on in Iran. So I'm not surprised, but at the same time, this has been more of the same. So not a huge move there, to be honest. Now, diving deeper, what I wanted to cover next on these charts is beyond the 10-year, we had some requests for AMD and NVIDIA. So let's talk about both of these, both kind of right in between their earnings cycle, meaning we had earnings back in May, the next earnings is out in August, so you're kind of right in the middle between earnings. Big move to the upside. Now, what I want to do is I also want to overlay the simple moving average, the 50-period simple moving average on this guy. And I want to pull up on NVIDIA as well, because the reason why is we had a very strong downtrend. We crossed above it, little fake out right here. We've now crossed above, back tested to some degree, not super close to our level, and have been pushing back up. And now we're sitting inside of an area of interest because there's not a lot of volume on the volume profile all the way up to in the 150. So there's some room for AMD. There's also some room for NVDA when we load up here on TradingView, if it can break an all-time high. Believe it or not, an all-time high we are getting close to on NVIDIA. Now, they have earnings out at the end of August, so a little more time until their next earnings, a little more runway in terms of like less risky, swing tradable action if you are to trade that. But the reason why I pull these two up is because they're approaching, or I should say NVIDIA's approaching all-time highs. AMD, not so much. AMD's chart does look a little bit more interesting, as in if it was to get some push to the upside, I could see absolutely. Why not? Why not? Why not make that push towards that 160 zone up into here? I could see it. However, we've got some data behind it. So what I want to do is I wanted to pull up, not this yet. We'll come to this next. I wanted to jump down to seasonality just so we can get a sense. This is actually a really good report to look at here on Edgeful. I'll leave a link to Edgeful below. I think they're giving away a 7-day free trial if you're interested as well. It's where I get a ton of really relevant, awesome data. So I pull up AMD as my ticker, and I'm looking at the seasonality report. And not only am I looking at the seasonality report on AMD just over the past year or two, whatever, it's 5 years. So this goes back 5 years, and what you can see is that the month that we are in, it's highlighted in blue. That's Edgeful's colors, but so it's not red. So it would normally be red because it is negative. It's like down below the 0% line. But past 5 years, we've actually seen negative price action on average for AMD this time of year. Past 3 years, a little more pronounced. Okay, past 3 years down like 10-ish. If you go to the past 5, it's a little more substantial, right? So actually, you can see the numbers here, by the way. On average, down about 3.23 in the month of June. We're more than halfway through the month of June. So past 3 years, we're down about 10.5. Now, why I pull this up is because I want to jump back to NVIDIA as well and see if we can make some comparisons. But what you'll see is that there's a lot of similarities. So the average monthly return, now NVIDIA had a pretty nasty June recently, so that really skews the numbers there. But if you go back over 5 years, it averages out a bit better. It's still not great. So this is by far like the worst month for both of these stocks over the past couple of years based off seasonality. Now, I also wanted to pull up SMH, which is the semiconductor ETF. I'm not trading this. I just marked this out as an example earlier today. I was trying to visualize this. But if you take a look at it, this could be a breakout opportunity above, look like 266 or so. Yeah, 266. Above that, there's maybe some push. You can actually get, looks like a 2-to-1. Yeah, about a 2-to-1 risk reward, risking one to make two, which would get you right to the high, the prior all-time high on SMH. So it's like you have a very bullish, potentially looking chart with a breakout there. You've got strong moves or strong stocks in AMD and NVIDIA nearing all-time highs to be, exact on that one, more closely mirroring the SMH chart. And you have now what is the month, or we're in the middle of the month of the worst performance that these stocks tend to see. So if I was to even jump into not even this, if I was to jump to back to AMD, sorry, if I jump back to AMD as an example, what do we tend to see on the backside of this in July? Well, we see a slight positive the past 3, but in the past 5, on average, the second strongest month is July. So that's interesting. NVDA, not so much in terms of the past 3 years, slight positive, past 5, actually negative in July. Interesting. So based off of this, if AMD were to hold up, chances have it, based off of seasonality, that there might be a little bit of a little wind behind its sail. I think that was interesting. Not to mention, I think I also wanted to pull up the 50 SMA for a good reason, because if you go back to AMD and NVIDIA, if you look at these charts, they recently crossed a few months ago, or about a month ago, a few weeks ago, I should say. They recently made that cross above their 50-period moving average, AMD, a few weeks ago. Let's see, NVDA, when was that? That was a little bit earlier. No, about the same time, back in early May. Okay. And I was just messing around through some of these charts before I was making this video, and I thought this is very interesting. So I looked down beyond the seasonality report, which is actually down here. You go to SMA Performance. So if you're more of a swing trader, this is actually very interesting to you, and for our videos specifically, I think. So on Edgeful, we pull up the SMA length 50, okay, and we have performance versus, or this on the left-hand side is going to show us off the daily time frame. I have it both selected the daily, but this is going to give us the number of bars, so the number of daily candles that we see after a cross. So a cross up average bars to high, meaning essentially that on these past moves, and now I have this set, by the way, to the past 5 years. So it's going back over some time. So we have some good data here, not just the past 6 months. There's not that much data. The past 5 years, every time we get a cross, meaning a candlestick closes above the first candle after being below, okay, the 50 SMA, to close above, which would be this candle right here, we've seen on average, okay, more of like a swing trade move, on average 147 bars until it reaches a high. Interesting. Okay, sorry, 136. This is actually the max. Cross up max, a little bit off here. The black one is cross up average bars to the high. 36 bars on average to the high. The max was 147. The max down was 71, and average down to the low was 25. Why this is important is because we saw when it crossed up, the max move that we saw from the cross to the high was over 200%. And we've seen substantially lower, or not as bad, I guess you can say, moves to the downside of negative 40% cross down to the max. But on average, okay, when it crosses up, we see an average move over the past 5 years of 33, almost 34%, and down of 13. So why that's interesting to me is because if you do the math from this exact candle to where it's at right now, we're at 25. But if you were to put us right to all-time highs, what is that number? That number is exactly 34%. It's literally exactly, okay, the average lines up exactly with what we with the move that NVIDIA would have to make from the cross, which we've already seen, to get to an all-time high. Very interesting. I thought that was very interesting. AMD, let's take a look at AMD. So AMD, not as insane of moves because, well, I guess the move up was not as insane as NVIDIA, but let's see. On average, the cross up, okay, on average, after the cross up, 23.57. Now, the reason why that's interesting is because AMD, after the cross up right here, somewhere in that ballpark, we're up around 30. So we are already above that. So we are on average doing better on AMD right now. On average, we're doing better than what we normally see with the summation, or I guess the average of all the times that it has crossed above the 50 SMA, okay, in terms of these moves. Now, max move 97, and we saw NVIDIA was over 200. So they've shown us they can absolutely make big runs. But I just thought that those two averages were interesting, meaning AMD is already above what we see on average when it crosses that 50 SMA, that move. And NVIDIA just so happens that average move would be right to all-time highs. Let me know in the comment section down below what you're thinking about the two of those. I think they're two very interesting stocks at very interesting points, kind of in their, I want to call them their journey. I don't know what you want to call them. All right, back to some other ones we talked about. Etsy had a huge move. We talked about that in the past videos. Has now pulled back, but could be at the point of back testing a very strong area of volume support, which I like to see that, to be honest with you. Right there on Etsy. See if it can kind of curl up and make a push above its 50 SMA right now on that bad boy. Diving deeper, Tesla is really in a consolidation. So it had the news of Elon and Trump kind of falling out. Maybe they made up, maybe they didn't. I don't really care. But you've got a wedge or a consolidation forming on this guy right below a pretty strong area of volume resistance. Above that, I think it's juicy. But if it can't, there's definitely a scenario for sure where we see a movement back down towards this volume support zone around 250. It's also a psychological spot. So I'm looking at that as an area of interest. Really, 350 is kind of the first break zone. Break above that, we are looking interesting for a move up. And then if not, I think a roll over to 250 is also, it's a big move down, but that's not it wouldn't be crazy for Tesla. We've seen crazier moves. Silver, we talked about silver last week. Let me get rid of this SMA because it's kind of annoying me right now. Just kind of in its little zone, waiting for her to, make that push higher, kind of in a consolidation. Gold, I believe, is next. Yeah, gold just making higher lows. Making higher lows, doing her thing, doing the thing. MP Materials, absolutely crushing it. Volume has continued to come in. Very strong stock. I think we can talk now about what is the next spot. It's starting to push up into an area or above an area of interest. Yeah, it broke above this path. So it finished last week here. We're like, okay, cool. Right below a very strong zone. Kind of said, screw the zone. We're going to go right through. And that's what you can get when you get some news behind some of these moves. So you're now, if it stays above this 35, I think that that's very, very, very interesting for the long side. If it can get that continuation move. The only problem is that you're very overbought. Doesn't mean that we can't go, we have to go lower. No, we absolutely can go higher, but you are very overbought. Something to think about. And then last but not least, I want to pull up Roblox. It's kind of gone under the radar as a sneaky little stock because this is a stock that we kind of forgot about, I think, after the big move down back in 2022, that bear market. Roblox is absolutely crushing it. Look at that weekly chart, crushing it. And not to mention, if you jump out the bigger picture on this, I mean, in terms of volume resistance, volume profile, give it a second to load here. There's not much. I mean, there's maybe the next area of maybe interest is like 118 to 120, but exceptionally strong stock. Be careful because it's very strong. That doesn't mean that it has to keep going. I would be cautious about this one because, like, look at how just steep this move is. It could absolutely make a nice pullback and stay strong, like it's made some of these pullbacks in here, and then continue to go higher. Absolutely could. Just be careful. It's up a lot. It's a very overbought stock. If you have any other requests, chart requests, leave them in the comment section down below. We'll get to them in the next videos. I'll leave that link below to Edgeful for a 7-day free trial if interested. And I hope you guys have a great rest of your day. Thanks so much for watching. Leave a like if you're interested in watching these next week. Maybe subscribe, and I'll see you next time. Peace.